Good afternoon, DGen Nation. To all you listening out there in FinTwit and Discord, my name is RancidR2, and welcome again to another wonderful edition of Reactive Recaps. Alongside me is in the battlefield is Yellowbird from the Hide Trading, here to help us out another day. Happy Friday.
How you doing?
It's Friday. I'm doing great. So I hope everybody remembers from last week. This is the day where Bird and I actually show that we're human traders. And we make mistakes. And we don't win every trade. And that's why we like to call this Fuck Up Friday, where we can be as transparent as possible. And that, yes, even us take bad trades. So the format of the show, even though it's Fuck Up Friday, is the same as it always is. Bird and I are going to go over some setups from today that we fucked up. We're going to show you why we fucked up, why we entered the trade, why the trade ultimately turned out wrong, and why it's okay. And why it's okay to be wrong. That's something you all need to remember. Learning that skill set will help you to be one step closer to submitting your resignation to Wendy's permanently. So with that, I'm going to pass the mic over here to my man Bird, and he's going to go over this morning's futures fuck up.
All right. So, this morning I was trading on MNQ. That is the micro for NQ. The jobs numbers came out at 8:30. We had this giant move up, consolidated, and we tapped here a couple of times, creating this trend line to trade. Now, when we came to it at about 10:30, I had previously already decided and predicted that I was going to take a trade on the tap of the trend line regardless. So here, as soon as the price action touched the trend line, I took a long position. Now, reasons I should not have done that is if you look at the candle before, we have the price action went up and it came down, and we have that long wick above. That showed that the price tried to push up, had weakness, and came down. What I should have done here is waited for this candle to close right here and then entered if the trade was still valid. But I got impatient and I went ahead and just put the limit order right there. I had pre-decided what I was going to do. I did not react. I tried to predict, which is something that we try and stay away from, that I try and stay away from, and I did not this time. Now, everything was fine, turned out fine and great, because on these next couple of candles, when it broke back up and retested this trend line, I took a short here, took profit, got stopped out, took a short here, took profit, got stopped out at break even, and then took another short as this other trend line that closely mirrored the first trend line started to form. So on this trend line, I started playing shorts off of and making the money back that I lost. And that's the beautiful thing about futures is with options, you have buying power. If you're under $25,000, which most people are, you have to worry about how much you can buy in a day, how much you can use up in a day. With futures, it's instant settlement. I can, if I lose this trade, I have what I lost what I lost, but I have all that margin back in order to trade with, so I can enter these other trades. That is a double-edged sword, and you can end up being it is a double-edged sword, and you can overtrade very easily. That is something you need to watch out for. Definitely, but that is my Friday fuck up right there.
I think one of the better parts of that story, Bird, is how you didn't let the fuck up fuck you up. You were able to shake it off like everyone listening to my voice needs to learn to do. If you can't take a losing trade and not operate properly in the market from there, stop trading. You'll lose it all. And that is a key psychological element, an emotional element of trading that nobody really likes to discuss, is how to manage your emotions after a losing trade. And it's even worse on the opposite, how to manage your emotions after a winning trade, thinking that you're invincible and taking more risky trades. And another thing that's really wonderful about what Yellowbird just said is he just made a lot of money from drawing a line on a chart. It's just that simple. Now, does it work every time? He just explained how it doesn't. But it's a probability game, people. You take these repeatable setups, you manage your risk, you manage your trade, you'll be fine. So, with that rant, and forgive me, I will go into my options play from SPY this morning. You can see the first oval. We had a major bullish move from the pre-market off the jobs numbers. And I would got a little aggressive. As you can see, the doji looking candle, or the hanging man, sometimes people call, they have all these crazy names for candles. However, in my previous trading experience, I see that as an indicator that we are going down. When we're in a major bull channel and it gets sold off like that with a giant wick, usually an indicator we're going back down. So I took a short. Didn't go. It went down a little, and I was sure I was going to be right, but then it flipped on me. I'm like, no worries, it's going to come back down. Didn't. Cut. So my anticipation into getting into that trade, I was predicting a reversal, not waiting for confirmation of a reversal. So I caught a major knife there, and I paid for it. And did I make it back up later? Absolutely. But that was a fuck up. Not waiting for confirmation, assuming that I knew what I was doing was right. Nothing but confidence and nothing but bias. And those things are a recipe for losing money. My second fuck up, which I'll highlight, is the second oval. Right there. I saw a reversal, three bull bars, a little bit of a retracement. I'm like, okay, I'm going long here. Took the long on the green candle. Oh, great, it went up. Uh-oh. Immediately went back down. I'm like, it's going to bounce. Don't worry. It didn't. And I got wicked out. Again, another place where I'm assuming and predicting what price action is going to do just because I've seen it done in the past. Now, 9 times out of 10, I'm probably right there. But that time, I'm wrong. And you have to be willing to let it go, move on to the next trade, because that's the only way to do it. If you're doing it the other way, you'll never be successful, and you'll always be wondering why. So, Bird, those are my 2 fuck ups.
Yeah, they I mean, your first one kind of coincided with mine. We went ahead and tried to predict what was going to happen instead of reacting.
Yep. It'll kill you every time. Especially if you're a new trader, you really need to have an extreme amount of patience to wait for that setup that perfectly aligns with your system. Now, granted, uh, Bird and I have been trading probably a little bit longer than most people listening. That's no excuse, though. Just because we've been trading a little longer shouldn't be an excuse that we could take riskier trades. But it happens because we're human, right?
Yeah,
So it's a lesson learned.
it is. And it's a lesson that I continue to learn and probably will continue to learn, because that's what trading is. It's just learning lesson after lesson after lesson. Once you have a good grasp on, you know, these bad habits, then you start finding out that you have these other things you need to work on, and then it's constant improving of yourself is what it is. Now, today I wanted to expand a little bit more on trend lines that we spoke about in the last podcast. Um, if you look at my chart here, notice that 2 minute trend line that I traded off of this morning that I discussed, the one that failed. If you look at it on the 5 minute level over here, it was a clean trend line. And had I been trading it on, looking at it on the larger time frame, on the 5 minute, there were opportunities here and here to enter in longs, and I could be in a long right now, continuing to move up. Getting those 40 points for the eval easily right there. Now, looking down here at the daily, we are approaching a trend line right here. As we speak, as we are recording this podcast, we are reaching this trend line. Now we have trend lines at different time frames telling us different things. The way I like to do it is I like to think that the higher time frame trend line has more strength. That, from what I have seen personally, that holds true. That the higher the time frame, the more strength it has. So as we're sitting here approaching this daily trend line, I'm going to be more cautious and more hesitant to enter into a long trade on the lower time frames. That doesn't mean I'm going to enter a short on that daily time frame, because I would get absolutely smoked with a 10-point stop loss on that one.
So for the newbies out here, including myself a little bit, why don't you describe like how many touches are you looking for on a trend line or on a lower time frame? Like how many touches before you think there's a trend line? How soon is too soon to draw a trend line, or and you draw them from the top and the bottom to make them like a channel or a wedge or something like that?
So I like to see at least 2 good points of contact before I draw a trend line. And what I mean by good points of contact is to see the price action make the point, rise off of the trend line, come back up, rise again, come back, and then hit again. That to me is a good trend line. What would not be a good trend line is, like, let's say right here, where the candles are just marching up and there's no real pull away from the trend line and then a retest. It's all just grinding up. I don't like to consider that a decent trend line myself. I like to see the action pull away from the trend line, come back, like in this instant, come down and then find some strength, move up again. The more strength that it finds, then that shows that trend line itself is stronger.
So would you say that a trend line is one of your most repeatable setups that you, as an experienced trader, still use to this day?
Yeah, most definitely. And if you look at channels, wedges, flags, all of it are just 2 trend lines that come together. Like a wedge is 2 trend lines that come together in order to force the price action to react in that consolidation, to react and go in a direction. When those 2 trend lines converge, one of them's going to break. So a wedge is just a trend line trade. Flags are 2 parallel trend lines where it stays in there and consolidates, and one of those trend lines is going to break. And once it does, it's off to the races.
So basically, Bird, what you're trying to relate to our wonderful audience is the difference between making money in the market and losing money is drawing a line on the screen, people. That's it. It's just that simple.
It really is. Now, it really is. You can sit here and I have some of these other levels on my chart like previous day high, Globex high, the expected moves for day, week, and month. But in essence, I trade those levels differently than what I would a trend line. I could take those levels off and just trade trend lines and be just as successful.
So all those fancy indicators that you have on your screen, people, these Bollinger Bands, EMA clouds, Ripster moves, they're all useless unless you know how to use them properly. But this strategy that we're teaching, it is a very simple strategy that doesn't require an over analysis. The more indicators you're using, the more likelihood is you're going to have paralysis in analysis, and therefore you're not going to hit the buy or sell button, and you're going to miss a move, and you're going to kick yourself all day long. So don't overthink it. Draw a line. Bird, one of my mentors in trading, told me when I'm bored in the middle of the day and I'm not seeing a setup that I like or anything, and I'm not in a trade or flat, he says, when you're bored, draw a line. And I've been doing that over the last few months, and I'll tell you what, it not only helps with breaking up the boredom of the day waiting for a setup for me, but it also, keeps me on with trend lines, wedges, flags on the daily that I normally wouldn't look at. So I think just having that routine of when you're bored, draw a line is a really helpful advice.
Yeah. I mean, one of the things about trading is it's all about experience and screen time. And screen time is not just sitting here staring at the chart, watching the candles form and everything like that. You're not gaining a lot out of that. What you do in the times you're not trading is you find those trend lines, you draw those trend lines, you find those channels, those wedges, everything like that, and you create potential setups and setups that you may have missed, and look back and look at the trading. And that gives you experience and knowledge that you can use later on, because you can, in 2 days, you may see that setup that you've seen the last 3 days form again, and then you can move forward with it this time and not miss it.
And that's another key principle that everyone listening should really take into account. You don't have to hit every move. It's okay. You missed it. Heaven forbid you miss one setup. There'll be another one a little later, and more tomorrow, and the day after that, the day after that, the day after that. Don't chase moves. If you miss it, oh well. Go on to the next one. No FOMO, none of that.
Yeah, I mean, I could sit here and take these charts right here and start drawing lines, channels, all this stuff, and I could find 15, trades that I could have taken. But it's not about the quantity, it's about the quality.
And nothing does worse for your mental health than playing the woulda, shoulda, coulda game. Whatever happens, it's in the past. Let it go. Take some notes, journal the trade. Make sure you don't make that mistake next time. That's how you learn. That's how we all learn. It's super simple. Just don't overthink it. Stop comparing yourself to other traders. Focus on yourself first. And then focus on setups, take base hits, make some money, quit Wendy's.
Yeah. And I mean, it going towards the mental aspect, which is something I want to get into later episodes of the podcast, is the whole mental side of trading. But I saw something on FinTwit this morning that I really liked, and it was remember that bringing baggage into your next trade is the quickest way for it to not work out. Clean slate each trade. And I read that, and I thought that was that's something I say all the time, is to leave the past in the past and everything like that. But the way that they wrote it out and the way that I read it, it was just it was clean and it just clicked. And I really like the way that they said it. Clean slate each trade.
I love it. I know this is maybe the last podcast, but the book The Best Loser Wins by Tom Hogarth, if you haven't read that book yet, do it. or listen to it on audiobook. If you buy his book, you get access to his live trading, and he is one of the best traders in the world. And his main point is the best traders in the world aren't the best at winning. They're the best at losing. So if you let that sink in, read the book. I know Bird has. So that pretty much wraps up the show. But what we like to do at the end is just kind of talk casually about, random things or things we saw in the market. And one thing that really struck me as strange this week is how the entire market made a complete reversal. I remember sitting here last Friday with Bird and we were discussing, we couldn't believe how much red was in the market. Now it looks like it's nothing but green everywhere you go. So it's quite a crazy whipsaw change of market sentiment, don't you think, Bird?
Yeah, most definitely. I mean, you look at the last 3 days alone, and we have gone up nearly 900 points, 800 points. I mean, it is just wild how quick the markets have just shot up the last 3 days. But once again, we're still in that channel. So right here, we're testing the top of that channel, which is lining up with the monthly expected move. And we're already above the second deviation of the weekly expected move. So we could continue to rip and cause sort of a squeeze situation because everyone isn't positioned for this big of a move. So we could see us move even higher this afternoon.
I think this
But it's going to be
I think this whole example is a perfect way to show people never have a bias. Don't think you know what's going to happen every week or every day, because as the market has shown, it can go down 20% in a week, and it could go up 20% in a week, and that's serious money to be made and lost. So always, and I know, Bird lives by this, that he doesn't walk into a day with anything. He looks at it and then moves from it. And I think that's a really key element for when people see these major trend reversals from week to week, to remember. Just because the stock went down today does not mean it's going down tomorrow. Just because it went down in the morning does not mean it's going down in the afternoon. And just because the last candle was green certainly doesn't mean the next one will be.
Yeah, most definitely. And if you're trading intraday, you shouldn't be trading off of the daily chart or even the 4-hour chart or anything like that, because you're not looking for a 4-hour or a daily move. You're looking for a couple of minutes. You're trying to get in, get your couple of points, and get out.
Base hits, everybody. No home runs. If you get lucky and get a home run, congratulations. Don't have that as your plan. Exit and entry of trades are very, very important elements of this whole thing. Some will say the most important. Scaling, very important. Managing your risk.
Scaling. I live by scaling. I enter in large amounts. I get greedy with my entry and I scale out. I get greedy with my scaling too. There's a lot of traders who won't have taken profit, and I've already taken profit 3 or 4 times.
So what Bird said is dead right. You have to come into these trades completely clean of bias, focus on the setups, and execute. It's just that simple. And Bird is a very successful trader. I'm not going to say numbers wise, but he is one of the most successful traders I actually know in real life. And his basis of trading is scaling. Come on, guys. Base hits. No more home runs.
Yeah, I mean, the home runs I do get, but that's after I have scaled so aggressively. My home runs are on 1/10 of my position size.
if you're looking on Twitter or FinTwit, Furu, whatever, and he's trying to convince you that he held an NQ contract for 50 points full position and didn't scale out, he's either one, dumb, or two, he's lying. Okay? Any trader worth their salt scales out on the move up or down. It's the only way to be successful in this market.
It's the only way to survive. I mean, if you keep holding for big moves and big moves, you're just going to lose your money, and you're not going to be here in a week or a month.
And that's the one thing that's so disingenuous about people that post their Webull, percent gained images and things like that. You have no idea that, one, the sizing, two, how many contracts he actually held. He could have held one. And it might not even be theirs. They could totally just manipulate those images to look whatever they want. And the point of putting those up there is to hook you guys into thinking that they're smarter than you. And I promise you, they are not. They are just good at marketing.
Yeah, I mean, and with any trader, I don't think that any trader is smarter than the other, because trading in itself at the core is extremely simple to do. Where everyone struggles with and has the problems is being able to trade within the system that they've worked out and control their emotions.
That's the key right there. So another point of this podcast, everybody, is to not only point out setups. All right, we're still in the basics here, guys. We're just trying to teach you basic fundamental techniques to help you become profitable. But what Bird said is exactly right, and I'm sure as you mentioned, we're going to tackle this a little later down the road, is the mental side of this game. Anybody could hit buy and sell. Okay? Having your mental game under control is the key to managing trades properly.
Yeah.
Do you have any?
That's all it comes down to.
Do you have anything good planned for yourself this weekend? Since it's Friday, we could talk about something else.
We got some of my daughter's softball this weekend, and then we're going fishing for a little bit because it's finally cooled down here, and then we got Alabama football. We're playing LSU this weekend.
That's a huge game.
Yeah.
What kind of fishing? Is it lake fishing? You're going out in the ocean?
No, we're going out on a couple of the ponds around here. Trying to get some bass and everything like that.
You cook them?
No, we catch and release. I don't anticipate catching anything. Just spending time with the kids outside. They love doing it, and we create memories. So that's what it's all about, really.
Awesome. Family time is one of the best aspects of, having the financial freedom that, by doing this gives us, is to spend that quality time with our kids, where a lot of fathers and mothers, they don't get that. And it's a real shame.
Yeah, it is. I mean, I've been fortunate enough to set myself into a position to where I can do that. And, I could spend all of my days from now on with the kids and not have to work another day in my life.
And that's the point of this podcast for all of you. Let me be crystal clear about Bird here. He, in the last 18 months, has become from what I would consider an average trader to a tremendous trader. Okay? So if he can do that in a year and a half of really stepping up his game from being average to excellent, guess what? So can you. So can I. We can all do it. You just have to be very, very regimented, disciplined, and patient. If you don't have those three, work on them. If you can't work on them, quit. Okay? My plans for the weekend are actually very similar to yours, Bird. Doing some family stuff. I'm going to my in-laws on Sunday, which is always an adventure. He's one of these My in-laws, he's a nice guy, but he's one of these rustic type dudes who heats his house without electricity. He actually goes out there every day and cuts wood and brings it in the house and heats his whole home with wood. Can you believe that?
Yeah, I can. That's how my family does it back home. Entirely um, out of wood. My grandmother's house and my uncle's house basically share the same yard, and they have a a wood burning stove that heats both of the houses.
That's crazy. You know, and what's even stranger from I get in a more rural place maybe, but my in-laws live, let's say, 40 miles north of Manhattan, and he's out there chopping wood in overalls and throwing it into a wood burning stove. I'm like, what the hell am I? Where the hell am I?
Yeah, I'm definitely from a rural area. I mean, I had a graduating class of 26. So,
Wow. Another thing that I'm doing this weekend, which I'm really looking forward to, Bert, is I'm meeting up with some digital friends in the real world. Um, I think one of the side benefits that I haven't highlighted yet is that trading doesn't have to be lonely all the time. You know, you could, and this is one of the benefits of discords. You know, you'll rarely hear me say, you know, this discord's great or whatever, but one thing discords are is they provide a community for people. You know, so you're not sitting there alone looking at charts all day by yourself trying to analyze this, that, and the other. You know, these rooms, you can chat with other people who have similar interests or ideas or thoughts and who are all generally looking to make money together. And so I'm really looking forward. We're going out to dinner in outside Manhattan at this fancy men's steakhouse place. And we're going to meet for the first time in real life. I've known this guy like 3 years. I've never met him in real life. So I'm really looking forward to it.
yeah, I've done a couple of meetups, and they're always a blast. Putting a face to the name is always fun.
Yeah, and it makes the relationships, because once if you have a digital relationship with someone for 3 years, they're your friends. You know, like I talk to a lot of people on Discord, including yourself, Bird, more than I talk to my regular geographically local friends. It's just, you know, we're basically coworkers. You know, we chat all day about the market, the structure, what are we looking at, and it's just been it provided me with such a nice social aspect that you don't normally get when you're trading alone.
Yeah, trading can be really, really lonely sometimes. And like I always say, preserve that mental capital. Finding a group out there of like minded people will definitely help you preserve that mental capital.
As long as they're helping you preserve that mental capital.
Yeah. I mean, there's a quality community are very far and few between. I have been in easily 20 discords, and most of them I am only in for 2 weeks, and that's it, and then I'm out because it's just a toxic environment of people trying to get rich quick. There's no actual education. There's no actual improvement. It's just a couple of hot shots showing off what they can do to a bunch of people that want to be just like them. And there's no actual value in it.
I always find that, you know, trading is simple, but it's not easy. Okay, so anybody out there that's making it look too easy, have your warning level. Have, you know, be warned. Okay, be warned. So, you know, with that, I'm looking forward to the weekend. I'm excited to get away from the computer a little bit, spend some time with the kids and family, and get outside. But I'll be rip raring ready to go Monday morning. How about you, Bird?
Oh, most definitely. I am looking forward to next week and seeing how the market processes this big move up and where we're going to go from here.
Well, I wish all you beautiful people out there in DGen Nation a very happy weekend, as you, Bird. And I'll close as I always do. Whenever there's chaos, there's opportunity, people.